Hello everyone. Yesterday was first day of the GST Council's 56th meeting following the Prime Minister Modi's Independence Day announcement regarding the GST reforms. So in this video, let's look at those first and then we'll discuss our regular pre-market report for today 4th September 2025 for the Indian stock market in terms of Nifty and Bank Nifty. As most of us know, the present GST structure was little complicated with the multiple tax categories. In order to simplify that, yesterday panel led by our finance minister approved the two-rate structure, such as just 5 and 18% replacing the current 4-rate structures, hence no more 12 and 28% GST at all from the implementation date. By approving this two-rate tax structure, they reduced the GST tax rate on hundreds of products, and it's really difficult to highlight all the products, but we can simplify saying this: all the daily use items are getting cheaper. Most of the food items will now attract either 5% GST or no GST at all. Whereas all the consumer goods such as toothpaste, shampoo, kitchen utensils, talcum powder and hair oil, etc. will be taxed at 5% down from the current 18%. Then the durable goods such as small cars and bike, air conditioners and televisions will be taxed at 18% down from 28%. Even cement will see a reduction from 28% to 18%. Here please note I said small cars and bike, since this GST reduction applies only to vehicles below certain engine capacities like 1.2 liters for petrol cars, 1.5 liters for diesel and 350cc for bikes. EVs will be continued to be taxed at the current 5% GST. So not all the auto sector will become cheaper. Then the another major beneficiaries is the insurance sector, as all individual life insurance policies and health insurance will now attract zero GST. Here Indian government recognizing because of this GST reduction, they are expecting the government revenue loss of around 48,000 crore rupees. Anyway, now the big question, when will this be implemented? Our finance minister said all these cuts and changes will be implemented from 22nd September, which coincidentally is the first day of Navaratri. So from the stock market perspective, I believe this GST reform is mainly positive for FMCG, auto, cement and insurance sectors. However, it's not all good news and it's really not a two-rate structure, since the panel also approved a 40% tax for the super luxury and sin goods such as ITC products, cars with higher engine capacity and carbonated beverages. Hence, it's negative for companies in those segments. And to be honest, none of the information is new and I don't know how much market will react for it today, as I believe the price action already considered all this. So those were the quick takeaway from the yesterday's GST Council meeting. Moving to US market, as a part of the long-running antitrust issue, US Justice Department had asked Google to divest its Chrome browser and Android operating system. However, last night US judge ruled that Google doesn't have to undergo the forced spin-off. And also court ruling allowed the Google to continue paying Apple to set Google as the default search engine in its Safari internet browser, which in turn in one single session made the Google stock price to increase 9% and Apple stock price to above 3%. Hence, last night Nasdaq outperformed other index and increased above 1%, whereas S&P 500 increased 0.51%. On the other hand, Dow Jones closed flat to negative. In case of VIX, it decreased near 5% and moved from above 17 to closer 16. Then about oil, from March to September compared to a year ago, phase by phase, OPEC plus countries already increased the oil production output by about 2.2 million barrels per day. And now for the October month, this coming weekend, there is OPEC plus countries meeting in which market is anticipating the further output increase announcement, which in turn decreased the oil price by over 2%. At the time of this video, Brent crude is trading around $67.5 per barrel and WTI crude closed at near $64 per barrel. Regarding Indian ADR, as it is, only Infosys closed negative, all others managed to close on the positive side. Here, Infosys was negative in the Indian market itself, hence there is no arbitrage difference, and same for other stocks as well. So basically, ADR and GDR haven't indicating any further price action. In line with all, early morning today, GIFT Nifty increased mildly and traded at 24,825, and equating that with the spot market, it's indicating the mild gap up opening of 20 points. Moving on to the yesterday's market, I like to highlight one quick thing. In line with the Tuesday night US market pressure, most of the major Asian market opened negative and closed negative. However, in the afternoon, because of the rating upgrade across various miners and metal stocks across the globe and the weaker dollar, which in turn increases the metal prices and metal stocks across the globe. As a consequence, European market turned positive, so does our Nifty. Here, I compared the UK FTSE with our Nifty. If required, please pause and have a look. As we see, yesterday in the afternoon, as the yellow curve started to increase, so does our Nifty also started to increase. Please note, I am not saying this correlation will happen every day, but on certain days, our market does follow the global market and momentum. Lately, because of Trump, our market had been on outliers. Now it seems because Trump is speaking less and Indian market has slowly started to digest this 50% tariff. Hence, it seems Indian market is returning to normalcy. So always keep tab on global market movement while doing the intraday trading. As a summary, US market closed positive just because of Google and Apple. So we can't say global momentum is good and not bad either. Then locally, this GST reform approval is positive, but as we discussed, all those were already considered in the price action. Hence, for now, both Indian ADR and GIFT Nifty indicating the flat to positive opening. About institution, in the cash market, again FI was net sellers. They net sold for near 1,700 crore rupees and DA net bought for 2,500 crore rupees. Then the surprising thing was in the index options, where proprietary traders completely unwound their negative position and moved closer to neutral. Here, please note they are net buyers of both call options as well as put options equally, which means though their overall position is neutral, but they are expecting the breakout on the either side. It could be upside or on downside. Other than that, as usual, FI positions favors bearish market as they are having net 9% open interest on the negative side. On the other hand, retail traders are client having near net 12% of their open interest favors the bullish market. Regarding index future holding position, if required, please pause and have a look. Who is correct and who is wrong, only time will tell. Then, as per stock open interest, Indus Tower, Suzlon, Mazdok Shipbuilders, Havels, Colgate Palmolive and Axis Bank are some of the 29 stocks that got an increase in open interest along with a negative close indicating the short build-up. On the other hand, RBL Bank, Kalyan Jewellers, Nykaa, Delivery and D-Mart are some of the 88 stocks that got an increase in open interest along with a positive price close, which means these stocks got the long build-up. Then, about the things to look out. During our market time, there is nothing that I am aware of could influence the Indian market, but in the evening for US, their private jobs data, usual US weekly jobs data, crude oil inventories and service payment data are some of the items we need to keep an eye out today. Coming technical, Nifty opened 40 points gap up and was volatile in the morning. However, it gained strength in the afternoon and increased to about 24,700. Thus, on the daily chart, Nifty formed a bullish candle with a lower shadow, indicating a positive trend and buying interest at lower level. In addition, it maintained the higher low formation for the third consecutive session, and furthermore, Nifty surpassed the 100-day expense moving average and the million of the Bollinger Band in a single session, but still closed below the 20 and 50-day expense moving average. In terms of momentum indicator, RSI stands at 48 and is on the verge of a bullish crossover. However, MACD continues to remain below both the zero line. Hence, if Nifty reclaims and sustains above 24,750 to 24,800 zone, which coincides with 50-day expense moving average, then it might move towards 25,000 mark where the resistance is. Conversely, if Nifty fails to hold above this zone, then the consolidation phase to continue with the immediate support at 24,500, followed by the crucial support zone in 24,400 to 24,300 range. In case of Bank Nifty, it opened 30 points gap down, but it managed to close above 54,000 mark. Thus, on the daily chart, Bank Nifty formed a long green candle next to the previous day's red candle. However, the broader trend still suggests bearishness as Bank Nifty continues to trade below its 20, 50 and 100-day exponential average. Notably, the 20-day exponential average has fallen below 100-day exponential average. Hence, going forward, 53,600 to 53,500 zone expect to act as the crucial support, and on the upside, 54,300 to 54,400 zone is the key resistance. Regarding the options front, the maximum call option open was at 25,000 strike, followed by 25,500 and 24,800, with maximum new call option rating at 25,000 strike and then 25,500 and 24,900. On the put side, the maximum open was at 24,500 strike, followed by 24,600 and 24,700, with maximum new put option rating at also at these same levels. Thus, from options data, it suggests that 24,600 to 24,500 zone is expected to act as the strong support, with resistance likely at 24,800 to 25,000 level. So that's all in this video. Hope you got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.